Excellent. Okay, so guys, let's start by sharing with everybody what everybody does. Okay, Stephen, I want you to talk to us because you are a very controversial person because you are centralized and we are in a DeFi conference. So I need to understand how come you got invited? Okay, tell me.
Well, I think, unfortunately, centralized everything is a necessary evil. I don't think it's going anywhere. So, I think there's a place, and I think centralized exchanges and DeFi are very symbiotic. Ironically, we have quite a few DeFi tokens listed on Bittrex Global, which is a centralized exchange, and people are trading them there. So that's ironic in itself, isn't it? But I think we're seeing a lot of institutional interest in the DeFi space right now. I don't know if you saw, Grayscale is launching an institutional grade DeFi fund. That's highly centralized fund of DeFi assets. So I think DeFi is an interesting space, and we'll obviously talk about it a lot. But I think you might have a centralized access point to it, and I don't think that's going away.
Mm. And very quickly, are you guys planning to move into a more DeFi environment, or are you happy with your model?
No, we're that's not for us. So I think, and again, we think there's a lot of great DeFi projects out there. Super excited about the ecosystem in the space, and we have a lot of really interesting DeFi projects which we have listed on the centralized exchange, to support the space. But that's sort of how we want to participate, sort of focusing on what we do best. So I think, again, it's a great opportunity. There's lots of great DeFi, decentralized exchanges out there. That's just not our business model. And
sorry, you were saying earlier to me that you are operating in Liechtenstein and Bermuda.
Yeah, so Bittrex Global is for the non-US customers of Bittrex, which is a pretty old exchange. It's been OG exchange, but we're very focused on regulation and doing things the right way. We looked around, and for our non-US clients, we found Liechtenstein, which is an EEA member state, a AAA rated country. Swiss franc is the currency. They passed a blockchain act, and so you have 1,000% surety of what your status is, which is the opposite of the US, which you don't know if it's a utility token or not. So I think the EU in general has much clearer rules. And then within that, we chose Liechtenstein because they actually passed an actual blockchain act, which even like BaFin are consulting with FMA to see how to put something in place in Germany. So I think it's very high quality. We have 100% security in terms of like what we're doing there. Every token has a Liechtenstein legal opinion that's considered an EU legal opinion, and it's very clearly spells out if it's a utility token, that it's not e-money. So that it's not a security. You don't have risk of it getting reclassified after you've done it. So that's why we thought it was the best place for this moment in time for our utility token clients. And we do full KYC, AML on everybody.
Yeah, very cool. Thank you. Nick, tell us who you are, what you do, everything about Compound. Tell me.
Yeah, absolutely. So I'm Nick. I work on business development for Compound Labs, which is the team that built the Compound protocol. Business development broadly means anything under the business umbrella. So, around a year and a half ago, that was very focused on talking to crypto native institutions, the exchanges, brokers, custodians, hedge funds, smaller projects that were looking to leverage Compound's interest rates for some sort of product. And more recently has been focused on the non-crypto native institutions. So more traditional fintech, banks, anyone who's looking to do a foray into DeFi and just wants to get past that educational barrier and learn how they can incorporate it into their business processes. So a little bit more on Compound specifically. There are three sort of projects that Compound is working on. One is the Compound V2 protocol, which the team originally built and set live in 2018, has since processed over $160 billion of supply volume, is sort of seen as a core piece of infrastructure for the decentralized economy, and that our team decentralized and handed over governance to the community in roughly May of last year. So the Compound protocol just allows anyone with crypto to earn interest on their idle assets and allows borrowers to first post collateral and then take out over collateralized borrowing positions, typically for either leverage or liquidity. Sort of expanding on that core concept, the Compound Labs team is now working on a project called Gateway, which is going to bring those decentralized interest rate markets to a broader set of assets that aren't necessarily built on Ethereum. So with Gateway, you'll be able to connect these different peer chains like a Solana or a Polkadot and upload assets onto Gateway for different types of applications to earn interest, to trade, things like that. And then lastly, we just announced a new product called Compound Treasury roughly 3 weeks ago. That's more of a managed experience on top of the core Compound protocol. So we built a flow of funds that allows customers to send US dollars. We put that into the protocol for them by working with our partner Fireblocks, and then provide a simple, stable interest rate at 4% APR. So sort of the lowest barrier to entry for financial firms to get involved with DeFi.
Amazing. I'm really a fan of what you guys are doing. It's so impressive. I love it. Eric, tell us what you do.
Sure. Hey, guys. I'm the Chief Operating Officer here at Crypto.com. And as you may know, Crypto.com is one of the fastest growing regulated crypto platform out there. We offer CeFi as well as DeFi, mostly CeFi to bridge with traditional finance, make sure fiat can come in and out very easily, and also enable all our customers globally to spend their crypto with a Visa card. And we also have a DeFi offering with our own non-custodial wallet called the DeFi wallet, where we support, I think, 10 plus protocol now, 200 tokens, swap capabilities, as well as yield opportunity. We also have a public blockchain, the crypto.org chain, and just launched a testnet of a sidechain called the Kronos, which is EVM compatible and where we expect a thriving ecosystem to develop on the DeFi front.
And Eric, you guys are in many countries, is that correct? Like you live in Hong Kong, but I believe that you have got, many countries jurisdiction. Is that correct?
Yeah, we just celebrated our 5th year anniversary at Crypto.com, so now it's grown a bit. We have more than 2,000 employees across the globe, and a lot in Europe, in the Americas, and in Asia, of course. And we operate in more than 90 plus markets. Yeah.
That's amazing. Stefan, how many employees work for you guys?
Bittrex we have about 200 plus employees globally. That's not including sort of outsourced vendors and things. So, we're not as big.
Okay. So the question that I've got is, Stefan, talk to me about, besides crypto, what else are you guys doing?
What do you mean? What do we do? What is our business model besides? Well, we're a crypto exchange.
Other products. Where are you going? Like other products. You start.
I think other than utility tokens, which is not a security, yes. So we've started offering security tokens. We're one of the few that's doing that. We have a secondary license in Bermuda, and under the BMA, which is again a very hard license to get, you can trade. They don't distinguish between the tokens, so. We started offering a whole bunch of different security tokens there, like tokenized Google, Tesla, Apple. So unlike a regular security, they trade 24/7. You can buy them in small size. Definitely better for financial inclusion. But it's, I'd say it's a very relatively new product. I think the future of the markets, and again, this is centralized, but especially for security tokens, because those are securities and they're highly regulated where you're going to sell them. They fall under, just because the trade settles on the blockchain doesn't mean that it's not regulated, unlike some of our competitors don't really respect that, but not crypto.com, of course. But, I think that's getting around that. And I think that, securitizing traditional assets, real estate, you can pretty much do anything in a token and it can trade 24/7. So I think that's going to be really groundbreaking and very much disintermediate the banks. Again, it's a centralized entity that's going to be disintermediating them, but I think you're going to see very big financial disruption coming forward.
I agree. Like I work for ConsenSys, as you know, and we have a lot of clients that want to tokenize real estate, but they always ask the same question. Okay, now that we got the tokens, where do we trade them? So that's the big question. Like for example, Nick, we always want to know, for example, if we can bring to a DeFi market and use the tokens of real estate as collateral. Like, would you guys accept random real estate tokens as collateral for your loans.
Well, yeah, so the security token market is very new. It's very liquid. So I'd say probably not. So I think step one, you have to walk before you run. Like you have to get things tokenized, get liquidity in the market. And that's why I think the only things you're really seeing now are what I would call unsolicited ETFs. So tokenized Google, tokenized Tesla. That's kind of, there's liquidity existing in those stocks. And then you have utility token clients who want to start to trade that stuff, but in a tokenized digital format. So again, I think it's really early days. It's kind of like 2015 in the utility token market. So, I think it's going to grow really very quickly. But because it is highly regulated, and some of the less regulated players that have dabbled in it have found that has really got them caught up in regulatory, sort of scrutiny right now. So I think that people are going to tread carefully in that space.
Yeah, it's definitely an interesting use case. I think Stephen was right on in that it's the early days. I think the main issues would be the liquidity of the asset. So in order to have a solvent interest rate protocol like Compound, you need a very efficient liquidation engine. If someone's collateral is falling in price and their position is at risk of falling into default, there needs to be an engine. There needs to be an engine where a liquidator can come in, seize that collateral, repay the borrowing position. And so if there isn't sort of a liquid market and it's a non-fungible asset, then it presents a whole different sort of set of risks for the overall protocol and could introduce systemic risk. So I think we'll likely see, that form of collateral start out in more of an OTC managed setting. Once there's more of a mature market for those assets and they're more liquid, then absolutely it'd be great to tokenize all sorts of real world assets like real estate and have them be used as collateral to borrow against on protocols like Compound.
Yeah, agree. And Eric, are you guys thinking of going in that space for real estate tokens to be traded?
Yeah, not really at this stage. I think there's a lot to be done with non-securities. I think we can see the DeFi space really exploding last year in the famous DeFi summer. But some of the protocol like Compound and others have been working on this for many, many years. So it really came to fruition and started a kind of a revolution there. And we saw a lot of institutions also joining retail. And that's why today I think we're having that conversation, and we're seeing also some of these protocols and companies offering services to make it easier for institutions to benefit from DeFi, and not only about better yields, but also kind of new way to invest for them and deploy their capital, diversify their risk. So it's very exciting to see that transition from retail, then going to some of the more crypto advanced institutions to more mainstream institution now trying to dabble with DeFi on non-security at this stage.
And what about the unit trust industry, mutual funds? As you know, in the legacy financial market, that's very antiquated. There are hidden costs, hidden risk, all that, and many layers of intermediaries. Why are you guys not going into that? Because that is such a no-brainer. You buy the stock, you create the portfolio, and then you tokenize and you sell the units. From the issuer to the investor. Is this something?
Well, I think you're seeing the other way around now. So Grayscale and companies like that are taking tokens and turning them into stocks. So it's like square peg, square hole. So you've got a lot of retail investors who are too afraid of the blockchain still, or you've got institutional investors who by their mandate are not allowed to buy that, but they want to get exposure. But if you wrap it in something and call it a stock, then they can buy it all of a sudden, and then they can get exposure.
That's true.
But I think the other way around, I don't think so. I think on the other side, again, we are seeing that happening already. But the small example would be these unsolicited ETFs. So tokenized Tesla, tokenized Apple. I guess we could certainly do it in a fund pool. I think that will happen, kind of like to Nick's point. But I think it's just early days. Like you have to walk before you run. So I think that will definitely happen the other way around. I mean, I think convergence between crypto and blockchain, it is just financial services. It's just two different settlement systems. And we're seeing a massive convergence that's just beginning right now.
Yeah. Do you know that they asked Joe Lubin what's going to happen to finance in the next 10 years, to DeFi? And he says, finance, DeFi will be called finance because nobody will realize that everything had been decentralized. Is that what you think is going to happen? That eventually we will all move to like a DeFi type environment?
Well, so again, I think there's blockchain versus old world or crypto versus old world. I think the whole world will become on the blockchain, but I think it'll be centralized and decentralized. I don't think everything's going to be just become decentralized. I think especially institutional things are going to be very regulated, and it's unclear what the regulations around DeFi are going to be. So I think you'll still have both. So I think it's crypto and blockchain are the huge disruptors. And then DeFi and CeFi are just two different ways of kind of doing it.
Operating.
But maybe the others on the panel disagree.
Yeah. Other views?
I agree with that. I think the average user won't be exposed to DeFi directly. I think the great thing about these protocols is that they serve as, in Compound's case, this really baseline underlying infrastructure for yield, essentially an API for yield that anyone can plug into. And so the real opportunity for different types of fintech companies or legacy banks is to build better experiences on top of those yield. So whether they're instituting different parameters on the duration or liquidity, making it easy to connect bank accounts. I think that's where the real opportunity is. So someone, an end user may not know that whatever offering they use to trade or to get interest is powered by DeFi in the background. But they have a familiar experience and just sort of reap the benefits without the operational complexity of worrying about private key management and custody and paying gas fees. All that is sort of managed and abstracted away from them.
Yeah, I agree. Eric, what do you think?
No, I concur as well. I think we're trying, the first step is within our DeFi wallet, we integrated Compound, but it's like 2 clicks for someone. Yeah. They will know it's Compound, it will be mentioned, but it's just select the token, what's the yield, 2 taps, and they have this exposure. And as we move forward, this will move to CeFi platform, and it will be fully, abstracted for users, and it will just enjoy the yield and other experiences that can be built, whether it's variable or fixed or other type of rewards that can be added to it. Definitely, this is the trajectory we're seeing. And I would say the banks and the traditional players have seen this kind of investment thesis or equity story play out in other industry, the music industry, in retail. It's DeFi is it's software with that touch of decentralization, and that will eat, finance as well in the traditional way progressively.
Oh yeah,
I agree.
We're all going to disintermediate Goldman Sachs. That's good. Like they're out of it. And if you listen to these banks, one part of the bank is like building a crypto desk. Literally, the head of the asset management division in the same week will come out and say crypto is like rat poison. Don't touch it. It's just unbelievable.
Unbelievable
stupidity.
Yeah, we're going bankless, guys. Woo! Okay, excellent. Now, how do we bring the institutions?
So institutions are still centralized buyers. We see a lot of institutional clients on our exchange. They come to us because they have to have a counterparty. They can take Liechtenstein country risk where we are. So that's one thing. So a lot of these exchanges, they can't even trade with them because they're in a country that they don't have country approval for. We're regulated. So institutional clients, as they start to move into the space, they are moving towards centralized exchanges because that's by definition their rules. They have to deal with regulated counterparties, their compliance. Now, we have listed a lot of DeFi tokens just without fees because we want to give exposure. So I think, going to Eric's point, they want exposure to this totally disruptive business model, but they have, square peg, square hole. There's only certain ways they can access it. Whereas retail customers can do a DeFi play on DeFi. So I think there's more than one way to skin a cat.
Definitely. And they have also obligations. So they need to look at how they custody the funds. They need to look at what tools they have for monitoring. They need to ensure best execution as well. There's a few parameters that are added on institutions if they want to play the game. And that's why those steps needs to be managed. Some part a little bit centrally, especially for KYC. They also need to look at the pools and where the money is coming from on the AML standpoint. So there's a lot of consideration that goes into this decision. And that's why we're seeing these products emerging and the demand to have these different building blocks for institutional players to invest into the space.
And Nick, do you find that institutions get a little bit scared when you talk about a DAO?
Yeah, I think it's just a new sort of paradigm for them to wrap their heads around, particularly in sort of the risk management department. So if you take a very simple transaction on a protocol like Compound, something like supplying USDC to the liquidity pool and earning interest, the different sort of risks that come into play there would be, number one, the underlying peg risk of USDC. That'll always be redeemable for $1. The code security risk of the Compound protocol, the liquidity risk that the pool won't be 100% borrowed out and they can withdraw on demand, the default risk that the borrower's positions will always be over collateralized and there won't be any solvency concerns. So I think it's more of just an education hurdle of helping them understand how those risks are well mitigated in these decentralized systems. I think they very well understand the benefits of things like higher yield in a low interest rate environment in traditional markets. So it's really just helping them understand those different risks, how they're being mitigated, and how they can participate as a result.
So the question I've got still for you, Nick, is how do you cope with the fact that I don't think that you guys do KYC? Is that correct?
Yeah, so for Compound Treasury, we do KYC as well as accredited investor verification on any of the institutions that we onboard. The Compound protocol itself is still open and free to access. There's no change there. We view it like interacting with any sort of decentralized system. For example, if you used the Bitcoin or Ethereum blockchain, you're not sure where the Coinbase or miner reward is coming from. But so we think it's a pretty good standard there.
Yeah, and you, Stephen, you guys do KYC, of course, no?
We're a centralized exchange, and we're supervised by a European bank regulator. So we are doing MiFID II level EU bank level KYC AML on anyone. It doesn't matter even if you don't. Just to get an account, you have to go through that.
Really, wow. And Eric, what happens in your various jurisdictions?
Yeah, so we also are licensed in Europe. We're actually the first to get licensed on the crypto front, virtual VFA license in Malta from the MFSA, and we also have an EMI there. So we have also strict requirement on the KYC front, and also we work with Visa. We're a global alliance partner with them. That also level up the level of requirements. So globally, we do KYC from the onset, pretty strict. We've done that since the beginning. On all our kind of CeFi products. We have also a DeFi wallet, and this one is accessible for anyone. It's open. You have your full control. You're in charge. It's your keys and your crypto, and you can access also directly Compound as a retail user. And this one is more open. Yeah.
Fantastic. And then what's happening with self-sovereign identity, and how is that going to affect you guys? The evolution of verifiable credentials. Would that be a plus, a negative, not relevant?
What's a plus? I'm sure Crypto.com does as well. We have a lot of retail clients. The volume of clients is huge. I think we probably, in Liechtenstein, it's mostly been ultra high net worth. We've come there as a fintech company. We probably have more clients than anybody else there just because of the nature of the business. But to do that and to do the level of KYC that they require, you have to use digital tools. So the more that we have digitization of IDs, it just makes that process much easier and user-friendly for us.
Okay, yeah. Is that how you feel, Eric, too?
Yeah, I think for us, this KYC is a requirement, but it's also a big friction in our user journey. So anything that can help us facilitate that and make it more seamless for customers so they can get to what they come from, to get exposure to this new token that is out there, try a borrowing or lending product, get some reward on a card. I think we want to bring them as fast as possible while staying regulated. So that definitely helps.
Yeah, I agree. And then the last question, because we're running out of time. Talk to me, Nick, about your governance tokens. I love that. I really, you know why I love it? Because it's like so democratic and it's so inclusive, and then people have a voice and they can get rewarded by this. Just talk to me about that. I just love them. Yeah.
Yeah, absolutely. So Compound has a decentralized governance system, originally through what was called the Governor Alpha contract, which I believe now is the most used governance system in DeFi. By teams like Uniswap or Ample4, Pool Together. A number of different firms have used that in their protocols as well. But it allows anyone with a threshold number of the comp token to propose upgrades to the protocol itself. These proposals aren't instructions for another team to build something. They're actually submitting executable pieces of code that the community can vote to merge into the protocol's code base. So as you described, it really democratizes access and pulls brain share from all over the world, brilliant developers who are looking to shape the protocol in some way, improve it. There's been, I think, roughly 55 different governance proposals to tweak risk parameters, add new markets, completely change the governance system itself. So it really just ensures that the protocol will outlive its original creators as long as there's interested developers and Ethereum is still running. Compound will be continuously upgraded through this sort of everlasting governance system.
Wonderful. And can I ask the last question? We'll go around. I want to hear from each and every one of you. What do you think is going to happen to the work that you are doing in the next 5 years? Where are we going? Like, put yourself, let's say, in 5 years' time. What's happening in your life? Okay, Eric, you start.
Well, we'll probably all live in a metaverse, and we'll be surrounded by NFTs, and I think that will be quite magical. So I'm looking forward to that. We're also investing as a business in those long-term bets. We're not the only one. Facebook and others are on it, but we do feel the power of blockchain connected with those new words. It's going to be extremely powerful. We see it in gaming. We see it in the NFT space. But there's so much more that will happen. So we'll probably be all on the metaverse in our 5-year reunion from this conference.
I love that. Do you know that ConsenSys has offices in the metaverse in Decentralised? We've got the whole building. We have meetings. It's really cool. I love that.
It's already happening.
Yeah. And Nick, what do you think is going to happen? 5 years.
Yeah, I think there's a couple things that excite me. I think these sort of silos between different chains will be brought down. So whether potentially even central bank digital currencies interacting with public ledgers, it will feel more just seamless, especially for end users. Different types of assets, being able to lend, borrow, trade, everything across the board, and then just a more seamless, experience with interacting with traditional products. So I think, DeFi is essentially like a partner bank in your pocket that all these firms can tap into. And I think all these users will benefit. They won't necessarily know it's DeFi, but they know that the services they're getting are 10x better.
Yeah, I love that. Awesome. Steven, what do you think?
Well, I think in 5 years we'll know if Bitcoin versus the central banks, who's going to win. My bet's on Bitcoin. But, the central banks aren't going to go quietly. So I think we'll sort of know the outcome of that. I hope we can get some sleep in the next 5 years. I'm keeping up this crypto pace. But I think for us, I think we're just going to see more and more convergence, and there will be an active security token market globally. So all the stuff we talked about, and it'll be interesting to see how much that's eclipsed traditional securities markets, or if they still exist. And we're looking at other regulated financial services industries where we can integrate crypto. I think insurance is ripe for this.
Insurance.
Gaming, which is, we're focusing on very licensed industries where we know that our unlicensed competitors can't really enter or compete. So I think that's kind of, again, I just echo everything that everyone has said. And I think the traditional financial services players won't necessarily be the big names in 5 years.
I agree. Excellent. We ran out of time. Thank you, everybody. Lovely to have you and lovely to meet you.
Likewise.
Excellent.
Pleasure.
Thank you, guys.
Cheers.
Bye-bye.
Bye-bye.